Turning to Mr. Graywall, first round, 7 minutes.
Thank you, Mr. Chair, and thank you to witnesses for coming today. I heard the word pause a bunch of times, that the government should pause, see the impact of the regulations. So thank you for making that so abundantly clear. I couldn't agree with you more that we should pause, because I think we're at a sensitive place in the housing market, that there's regulation, which I think protects Canadians, but we also don't want to over-regulate this market, which will have negative economic consequences. I just wanted to get some more information on the default rate. So a few of you commented on the default rate, that it's historically low. How does it compare to other countries? And if you have that data, or if you don't, it's okay.
Excuse me. The CBA does collect data on mortgages in arrears. The mortgage in arrears rate right now is 0.28%, and what that means is about 1 in 350 mortgages are in arrears. You compare that to the financial crisis, that number went up to about 0.45% at around 2008 in Canada. In comparison, in the United States, that figure went up to above 5%, so 11 times that figure, which I think demonstrates the differences between the Canadian and U.S. markets. If you go back further, the mortgage and arrears rate has gone no higher than 0.65% nationally. Now, there are some regional variations, but nationally, that figure has been no higher than 0.65%.
Is there any insight into the economic slowdown in Alberta and default rates there in that regional market in Calgary?
Yeah, so we do collect that data. We've seen a slight uptick in mortgage and arrears, but it's manageable. And then we've noticed the same thing on the consumer delinquency side, that we've seen an uptick there. But because the books of the Canadian banks are just so broad, so diverse, they can diversify that risk to say other lower lower regions with lower mortgages and arrears, like Ontario and BC.
So the arrears number is one statistic, and then I'm assuming there's another statistic for mortgage defaults, like actual power of sales. Has that increased in the last couple of years?
We don't collect those figures, but I don't imagine them being particularly high, given that the mortgages and arrears are just so low. Because the mortgages and arrears are the mortgages that would then be in default, but quite often we would, in the instance of, say, insured mortgages, which have the lowest amount of equity, the banks and other lenders would work with mortgage insurers to help keep them in their house.
Yes, sir.
Yeah, I can speak to on the actual foreclosure side. Given we deal with the first-time home buyer, and of course that does represent small down payments and naturally the highest risk segment of the market, we've actually seen an overall decline in the number of foreclosures over the last number of years. Now, that's obviously a function of both the strength of the economy and the housing market, and we know from experience that unemployment is the key driver of mortgage default and claim or foreclosure. And obviously with the economy doing well as it has been, that has helped. But even when you go back in time to, say, the 07-08 timeframe, our delinquencies were only marginally higher than what you heard from Alex as far as the overall CBA delinquency rate, and have actually improved over that period of time. And that is a testament to a number of the changes that the government made that, as I referenced earlier, were positive and took out some of the marginal risk in the market. We're at a danger now, as you alluded to, of tipping it too far by going any further. But those changes that were made earlier in the years of 07, 08, 9, 10, 12 were good changes and have helped to improve the overall performance of mortgages in this country, including the highest risk mortgages or low down payment mortgages.
Thank you. In terms of application tracking, has there been an increase in the amount of Canadians applying for mortgages on a year-over-year basis? It's a broad-based question, so anybody can jump in.
I can certainly again speak to from a first-time home buyer point of view, which is the area we see. There actually has not been an increase. That market has been under pressure throughout most of 2015 and increasingly so into 2016. Again, you had a number of changes that were made. You've also had the ongoing affordability pressure that has really driven more and more first-time buyers out of the market. The most recent round of changes, just another blow to that situation. But for sure, The number of first-time buyers in 2016 was smaller than the number in 2015. We expect that to drop this year by another 15 to 25% based on the changes that were made.
It's a close figure, correlation. You mentioned applications. We'll look at mortgage credit growth. In 2008, mortgage credit growth was about 14% per year. That has declined to about 6%. So mortgage credit growth has not been has slowed down in terms of its growth. In addition to that, the nature of that growth has changed in terms of composition. In 2008, 2009, I'd say about 4 out of 10 mortgages were insured mortgages. That has declined to about 2 out of 10 right now. So the composition of, so not only has mortgage credit growth declined, the composition of that credit growth has changed as well.
An increase or a decrease in the applications that are approved.
That
are approved. So there's one is the statistic of how many people are applying for a mortgage. The second statistic would be what are the increase, decrease on approval numbers year over year?
For sure. Sorry, go ahead.
Well, I can speak to a bit of it. We don't have the exact numbers, but we did some estimates based on 2016 approvals. What we did is we modeled what the impact of the October 2016 changes would have been on our book, and it's a decline by about 37% nationally in the number of approved high-ratio mortgages. That's what we're estimating, and it depends on which region you are. It can be higher in the Lower Mainland, BC, of course in Toronto, and somewhat in Alberta, higher than that.
And to your question, as far as actual approvals in 2016, again, down over 2015, the down payment rule change being the driver of that.
Perfect. Now, my last question is, you mentioned the unregulated sector and how that could be a potential concern. Can you comment a little bit more on that and how you think that that could be a concern to the overall market?
This is anecdotal, but what we've observed is that as the mortgage insurance rules have tightened, we're seeing more and more borrowers being forced into what we would call sort of the private banking space, not necessarily unregulated because there are the MFCs that are in a way regulated, but really into private banking. What that means is that they're obtaining a first mortgage up to 80% loan to value that isn't insured, which doesn't require then the 25-year AM or the interest rate stress test, and they're going to a private lender to obtain another 10 or 15% for the remaining portion of their loan. That will be at a higher cost, but it's still reasonable to the consumer because it's the only way they can now afford a home. Our view is those borrowers represent good quality borrowers that we were insuring all day long before the change. They're now being forced into this more expensive option simply because the interest rate stress test is very severe, and in our view, too severe.
Okay, my last question, sorry, just 30 seconds.
Okay.
Thanks, Ron, you're a gentleman. The last question is there data on how many second and third mortgages are on a property? So if like RBC or TD or Genworth had the first mortgage on the property, but then the homeowner has a second mortgage on the property, and I would conventionally assume those are more riskier mortgages to be in. Is there data that's being collected on that?
I certainly have not seen that data. That data is not available publicly. So the answer is no right now.
Like through like PPSA searches, right? So like the bank would know if somebody took out another security on their security.
Yes, probably. But I'm not sure if I've seen that aggregated. I don't know if anyone has really taken the time to do that and taken a sort of economy-wide, financial market-wide perspective of that.
Robert to do it.
The credit bureaus do report when there is a mortgage, so you could, to Alex's point, look through that, but there's been no aggregation of that data at this point to my knowledge either.
Sounds good. Thank you, gentlemen. I really appreciate it.